Hey everyone, so in this video I'm just going to try to walk through some of the basics of all these fair value gap setups that I've been posting on Twitter recently. All this stuff comes from a YouTube playlist from a channel called Inner Circle Trading, which I'll link in the description. If you're not familiar with this stuff, I highly recommend checking out those videos. What I'm doing here today should definitely not be mistaken as a substitute to all of that learning material. I'm really just trying to practice and hope I can introduce the concepts to some of you in a way that's easy to understand. I'm just going to try to go through some of the setups this week from price action in the Nasdaq futures from the perspective of all those fair value gap type setups. So from a daily chart, just to explain, I tried to simplify some of the price action that we've seen in Nasdaq on the daily chart of the past few months. And so the theory behind these types of setups is that they're really just failed breakouts, and I think that's the easiest way to describe them. Is that you have some local highs here, you run past them, you have a quick move below, so it's a failed breakout. You break and have new lows here, and creating a shift in market structure, as ICT calls it. And then you have a retrace into an area that's more often than not in a fair value gap on on that time frame or potentially the lower time frames. And then from there you have a good chance of hitting lower and hitting some of these targets from previous lower lows. And same thing, vice versa, if this were a failed break below support that came back up and retraced, would have a potentially decent chance to make new highs. And so what a fair value gap is, it is just, in these really rapid moves up or down, it's the distance between the wicks of the candle before and the candle after. So in a down close candle, it's the distance between the previous candle's low and the following candle's high. And an up close candle is the distance between the previous candle's high and the next candle's low. And that's all it is. And so basically what the expectation of this is that just doing like a live example, if we're breaking highs right here, so this is buy side liquidity, which I tried to outline that here. Basically, buy side liquidity is just a high, a significant high where retail traders will have their stops to get out of a position, and so when they're forced out of the position, that provides liquidity to the market, and that's basically why they're called that, buy side liquidity and sell side liquidity, from my understanding. And so buy side liquidity here, important pivot, people are stopped out. Huge move down, a fair value gap is created in here, and you break these lows right here, creating a shift in market structure, which technically there was already a break in market structure right here when it created lower lows, but overall it's just showing that the theme of the market is still bearish. Then you have a retrace up into this fair value gap, so this is considered a potential short entry. Now where you actually enter can be done more precisely on the lower time frames, which I'll get into. But then it tags this fair value gap and then proceeds lower, and your target could be something like these lows here, the previous swing lows, if you're looking on this particular time frame. And so to give context to some of this week's price action from when I'm recording this, April 9, 2022, the week beforehand, right here, we had ran this buy side liquidity right here, which is a high at 15,260. And so if you can kind of see the wick on this candle right here, it just barely hits the top of that and comes back through. You can see we create a fair value gap right here. We don't really break market structure on the daily time frame, but we come back through and proceed lower. And so if you were just looking at this on the daily time frame with no other context, you could probably say that you want to enter on some reversal signal in this area with a stop above these highs. But in the lower time frames, it may be a little easier to pick something out. So that's really just to give a higher time frame bias of the trades you want to take. So if we broke these highs, we create a fair value gap, trade back into it, and are coming back lower, then I would probably expect to hit some lower pivots into the end of this week. And so I would be targeting these lows right here, and probably more basically daily lows. So this kind of stuff pairs well with the strat if you're familiar with those concepts. So if we look at the lower time frames, I'll start on basically Wednesday is when I'll show the super low time frame setups. And so on Tuesday, we closed the day right around here, 14,800-ish. And then that night we gapped down a good amount, taking out two key pivots right here. And so basically what that means to me is that there's a lot of liquidity under there. People have their stops under there. And so that could imply a slight move higher. Now, since we're so close to this pivot at the beginning of the day, I don't really know what to expect. Do we break this and come back through all the way to this previous market structure break, or basically I'm just looking at the lower time frames to determine my bias. But I see that from that overnight session, we create fair value gaps on the hourly chart right before the market opens, which is within this candle right here. So I'm expecting, not expecting, but I'm anticipating a potential move into here, which could be taken advantage of as a short opportunity to see the targets below, which would be, like some of these that we outlined, or even this low right here. Okay, and so from the hourly chart, sorry, it's a little messy. I'll get into this a little more. From the hourly chart, zoom in to the 15-minute chart and see that there's another fair value gap created in that very same area. These are two different drawing sets, but the same area right here. And so you have that confluence of having a fair value gap on two time frames, and with your overall higher time frame bias being bearish because of what's happening on the daily after taking out significant buy side liquidity. So on the lower time frames, let me get to that chart. ICT tends to use the 2-minute chart, which is really all I've been using to backtest. Seems to work pretty well. I'm sure almost any time frame is applicable, but that's just the one I try to practice with. And so early in the day on Wednesday, right as the market opened, we hit this fair value gap and proceed to go lower. There wasn't really an actionable signal on the 2-minute chart. If you zoom in, I think I had a setup on my Twitter posted. I zoomed into like the 30-second chart, like super low time frame, and found a setup from where you kind of come into here and then create a fair value gap, break structure, and have an opportunity to get in short. But obviously, not many of us are looking at those charts too often, so I just kept my normal charts on and waited for the setup to come. So I think, this was Tuesday, I believe, because at 2 o'clock we had news from the Fed. So we started to get some pretty erratic price action here. No actionable signals within here on this chart after taking out these lows, which is something I was trying to be aware of. But then once we shortly took out the morning highs right here, I noticed that, we took out those highs and come back lower, create a fair value gap. We have some local lows right here. We break them, we come back into the fair value gap. Now this is your opportunity to short. And so now your targets would be here, here, and here, in my opinion. So obviously you would want to target the local lows from, I guess, the low of the day, really. But some other targets you could consider are these imbalances, which are really just fair value gaps in the other direction. So you have some space between this candle's high and this candle's low, and that's an area where you want to be mindful of to take profit. So you would probably, based on all the videos and everything, I would put my stops above the highs that were basically the failed breakout. And so considering where my stop would be, where my entry would be, and where my targets would be, obviously this one never got hit. It would still be like a roughly 3.5 to 1 risk to reward from this trade in particular. So just to go over that again, we took out some significant lows, took out significant highs, came back through, created a fair value gap, broke structure by creating new lows, retraced back into the fair value gap. This is the potential short opportunity, and then ideally take profit on the way down into these targets. And so that was Tuesday or Wednesday's price action, and then so Wednesday. Sorry about these colors. Wednesday, what I was looking at is that in the overnight session, we created pretty significant highs. And then obviously looking at this chart now, you can see that these highs were ran, so buy side liquidity was taken out. So if you zoom in, I would expect to see ideally some entry to get short and target the previous day's lows, which is that level right here. So on the 2-minute chart, we take out the buy side liquidity. Oh, I think this is one. So no actionable setups really came from the 2-minute chart. I mean, you could technically say that this is a fair value gap, super small, but there was no structure break here until you got to these lows. So getting in here was not necessarily a valid entry because you're still creating higher lows at the moment. So I zoomed into the 1-minute chart on this day. Okay, so higher lows so far, and then, oh wait, did I create two? Oh, sorry, I was just getting confused with all these levels. I'll try to simplify everything. So buy side liquidity was taken out. We create a couple fair value gaps. Obviously, this one never got reached, and then we finally break structure right here. There's a fair value gap right here. So ideally, what you want to wait for is a retrace into this area, and I know ICT recommends for beginners that you don't try to, get the very best entry by shorting up here, or, it's really just trying to understand the concepts, and I think he recommends getting in as soon as possible. So probably creating a limit order right in this area right here, so that once probably you would get in on this candle. But you would target again, some imbalances, maybe this pivot from the structure break, and these pre-market lows as well would be valid. And then, again, putting your stop above some local highs or even above the failed breakout right here still offers some pretty good risk to reward. And then later in the day, I believe we have still a good setup. Back to the 2-minute chart. Yeah, so we're creating lower highs and lower lows pretty much all day long. And then right after lunch hour, we kind of create our first market structure break, bullish. And then, you have some fair value gaps that could be valid entries. Again, there's plenty of fair value gaps to look for. Like they're all over the place once you start to recognize them. I think the key to not getting lost in all of them and knowing which ones to actually take comes from being able to filter out the noise by waiting until all your criteria is met, right? Like you want to know when buy side liquidity is taken out, when sell side liquidity is taken out, which was yesterday's lows. And then when you start to break structure, now you're looking for setups to get in. So sure, I think getting in here isn't necessarily a bad idea, but in this instance in particular, seems kind of tricky to me where I would want to put my stop. I think you have a very slightly lower low here, and you also have one here as well that you could use as a stop. But I think the idea is just to wait for all that criteria to happen first, and then basically take the first one it gives you. So maybe even here as well. And so again, targets would be potential imbalances or fair value gap fills on the other side. So this would be one to look for. And then ultimately, in an ideal trade, you would want to target buy side liquidity, which in this case was the morning's highs, and it did end up hitting that. So some pretty solid risk to reward. Even if you extended it to this stop right here, I mean that's still a trade I would want to take. 10 times out of 10. And so fast forward to the following day. So on the 15-minute time frame on this day, we had a fair value gap right here, right? The distance between the previous candle's lows and this candle's highs. So I knew that, if we were to come down and take out yesterday's lows, I would probably be looking at that area as a target because once it reaches into that 15-minute fair value gap, knowing that the higher time frames have precedence, I would probably be looking for short opportunities again on the lower time frames. Because you want to obviously trade with the trend, and I think being able to spot fair value gaps on those higher time frames is a way for you to be able to do that. Similar to what we were talking about on the daily time frame, where you see this being filled, it's going to be in your best interest to look for setups to the downside, I think. And so, again, from the 2-minute chart, we take out yesterday's lows, pretty significant level. This is a fair value gap right here that you might at first consider to be an entry when price comes back in. But the thing is, you haven't gotten a market structure break yet. So for the purposes of this specific setup criteria, I don't think this is a valid entry. I think the first valid entry comes after these highs are taken out, and once you find a fair value gap to be filled. So this could also be considered a valid entry, and probably one you would want to take, since it's the first fair value gap that comes up after the market structure break. And so what you would want to target ultimately, again, is imbalances, fair value gap. So this is a fair value gap right here because there's distance between these lows and these highs. And you could also target, like I was saying, that 15-minute fair value gap. And so ultimately it hits that target, and then knowing that, again, the higher time frames are more significant, I would flip short. Well, I'd be looking to flip short if a signal presents itself. And so we create a fair value gap right here, but again, we haven't made any new lows. If we kind of zoom in a little bit, it's a little more clear that on a 1-minute chart, we make some lows here that are still significantly higher than these. And so, but after this candle, you see we create another fair value gap. This was from the 2-minute chart. Now we create lower lows. We retrace into here. This is your potential short opportunity, not this one. This one is a potential short opportunity. And then you're targeting, let me go back to the 2-minute. And same thing, you're targeting imbalances and some pivots below. This ended up being the only target I hit. And then later in the afternoon, we also had another run of buy-side liquidity, which in this case was the current day's highs, again reaching into that 15-minute fair value gap. So knowing, again, for the fifth time, knowing that the higher time frames take precedence, you could use this as an opportunity to just be cautious and wait for the signal to get short and be aligned with the higher time frames. And so we take out those highs, we create some lows right here that are still higher than this. We break structure by creating new lows here. There's a fair value gap that was filled around here, but you could also use this fair value gap and say once price gets above this level, that's where you want to get short. And so you would get short in this candle right here. And so again, you would target all these pivots right here, relative equal lows, a pivot right here, right here as well, same thing. And ultimately, the lows from the day were also taken out. But yeah, that's pretty much all I wanted to cover. I just figured I'd try to dive into how you actually find these setups on the lower time frames. I've been practicing them mainly for day trading. I don't use the daily charts and that stuff too much unless I'm trying to just basically get my daily bias. So like knowing that we had a fair value gap, we filled it, we're breaking structure, so we maybe headed lower. That's all I'm really using it for. The lower time frames are what I'm trying to trade actively, and so I really just wanted to try to present these ideas in a way that's easy to understand for traders who are newer to these concepts. But yeah, if you have any questions or suggestions for what you want to see in the future, how I can try to help you understand more, I'm always happy to do so. So please like, comment, subscribe, all that good stuff, and I'll see you later.